Welcome to the Week in Italian Startup, where we discuss the latest highlights happening in the Italian tech and investment ecosystem. All right, welcome everyone to the Week in Italian Startup, where Nicolo and we dissect the latest news happening in the Italian ecosystem. Welcome, Nick.
Ciao, Jack. Good morning. Ciao, everybody. Good morning, good afternoon, whatever.
All right. So, pretty easy week, I would say, last week. There is a little bit of a slowdown. Maybe it's endemic of the fact of, post-August, post-holidays. It's kind of normal, probably. Kind of a big news, maybe, which kind of stands out. And maybe let's start exactly from there. So, ProntoPro merged with Turkish competitor Armut, and the newco raised 50 million euro from existing investors. So it's quite a big deal, actually. So ProntoPro, for the people that don't know, provided services online directly. So any kind of consumer services, I would say. And it's been founded by two very capable founders that have been able to actually speed up the growth, especially in the last 2 years. So definitely a very, very good example of what's happening in Italy. Armut, I was reading, was just born in 2021. Actually, it's a very, very young company with a very steep growth rate. So I thought it was very interesting that they managed to merge successfly and raise capital in such a short life of both companies, I would say. What's your take on that, Nick?
Yeah, actually, I agree with you. That's a very interesting deal. I have to say that from what I see from Crunchbase, Armut appears to be from 2011, not 2021. I don't want to.
Okay.
Rude, but I'm just looking at the Crunchbase profile right now. Yeah, it looks it is the right Armut, but anyhow, it's an interesting deal because it's an Italian company that's gone out and it appears they acquired Armut, so it's a merger where ProntoPro is the one absorbing the other. Mm-hmm. And actually the two companies from the article, they're merging forces in order to strengthen their international presence, which appears to be quite complementary in a sense. So ProntoPro is strong in Italy, of course, with presence in a few other countries, and Armut is strong in Turkey and present in the UK and a few other countries, so they are, joining forces. I totally agree with you about the founders, and we know that currently the company, if I'm not wrong, is run by a professional CEO, I believe, not Marco Diengo anymore.
Yeah, I believe you're right. Yeah, I was also checking on Crunchbase. So apparently, let's see.
There we are, Alessandro Frau.
Exactly, Alessandro Frau as the CEO of the company. Correct. That's absolutely correct.
Yep. But I totally agree with you. Marco and Silvia was the founder. They started from scratch and they built quite a capable company in the market. And as we know, Silvia moved on and now she founded Surace and she already raised money. So she's a real serious entrepreneur right now. So good for them and for the track record. Yeah. And another interesting point is probably that there are no major VCs in ProntoPro.
I was about to tell you that. Correct.
Yeah, well, so sorry.
No, it's a good point.
I robbed you of the juicy piece from the article.
That's juicy. Let's talk about that. Yeah.
Yep. They raised most of the money from Immobiliare.it. That's an online classifieds real estate portal. Probably the biggest one in Italy, I believe, and very active in also investing and acquiring other companies. So quite of an active player in the ecosystem.
Yeah, and I would say also very sophisticated, kind of intervening in later stage, Series A's and B's. We've been talking about Immobiliare, maybe not too often like other players, but definitely a very specific and targeted player. So it totally makes sense for them, and with a clear strategy. So Immobiliare is definitely someone to look at for sure. On the flip side, Armut has been venture backed across the whole growth of the company, and there are a few funds which I think is worth mentioning: Hummingbird Ventures for a Series A, and ADD Venture, Adventure. Those are the two main funds that essentially develop the growth of Armut. So that's. It's interesting, as you say, like two different players from two different side. They come together with a common product, and then they decide to merge to conquer Europe, Northern Europe, and Southern Europe. There you go.
Yeah, it makes sense. Very interesting.
Cool. All right. So moving on, I would say let's talk about Dove.it, proptech startup raising 3 million euro in a round led by Azimut Alicrowd Eltif. So Dove.it in general, just for people that don't know, is a platform that essentially allows you to sell your home at the best price with zero commission. So it's a play where basically they're trying to solve the biggest problem of selling houses, which is time consuming and a pain, make it smooth and make it fluid through tech. So we've been talking about Dove, I think, in another occasion, if I remember. They came up already, and very good job in working with Azimut into the raise, because again, as we talk about Azimut all the time. In particular, this one is the vehicle which has been put together with Alicrowd, with Mama Crowd. Which essentially allows Azimut to have privileged access to the deals happening on the platform in some form or another. And definitely a player that gives a very good stamp of approval, I would say, in terms of deals.
Yeah, well, I think he said it all. So I can only add that Dove actually raised a crowdfunding round earlier this year from the Mama Crowd platform. I can see they closed their campaign in February last year.
Mm-hmm.
I think the article as well. And it's probably in that occasion that Alicrowd made the first investment in the company.
Mm-hmm.
As far as I can tell, this investment is not happening and hasn't happened on a crowdfunding platform. So this is basically double down from the Alicrowd funds into Dove.it.
Nice.
As far as I can tell.
Nice. So it's a good valuation, I would say. So 10 million pre-money. It's definitely on the high side of what Mama Crowd is usually like pushing down the deal flow pipeline, I would say. I was also checking out of curiosity the status of the Eltif, the Azimut Alicrowd. So I thought it was fun maybe today to go through, dig really quick into their website and see what's going on. So what is I mean, I kind of appreciate very much this kind of way of putting this kind of investments. So the Azimut is traditionally an asset manager, like working on all across different asset classes. And they did a very smart move by working with one of the first crowdfunding platform and including it in their offering. So this is perfectly aligned with everything that they're doing in terms of, I would say, like maybe a higher risk product. Of course, we're talking about startups, so that's interesting. So it's an Eltif, which is a special kind of European fund for the people that have never heard about it. And of course, the objective is to increase value in over the long run. So by investing in company from seed to late stage. So it's pretty wide. So given the standards, I would say, I don't know if you, Nick, agree, they've been playing mostly seed too early with a few in the late stage space, I would say. And what we've seen is basically, a very big support from the Mama Crowd platform. So that's very interesting. If we look into the prospectus, just to kind of dig a little bit deeper, so there is a minimum subscription of 10,000 euro, and they say that essentially the length of this fund is 8 years, and they have a target of 2x in general, which of course is not guaranteed. It's written in all possible forms as it should, but it's an interesting. It's a cool product.
If I may add, Jack, sorry to interrupt you. Another interesting bit from this prospectus, from this information page, is that the duration of the fund is 8 years, unlike the usual VC fund that's 10 years. So usually it is 10 plus 2. In this case, we have 8 plus 2.
Yeah, absolutely correct. Very good point. So I downloaded really quick the share, the Class IA share kind of like element here, just to give extra perspective. As we said, like the risk profile is definitely like on the high side, but I like how they're really like putting together like in a very like a clear and concentrated way, which is very like thoughtful when it comes to startup investing. So this is a good sort of touching point between really early stage startup investing and the more sophisticated instruments that have been available on the market.
Nice. That's very interesting. If I may add some flavor to what you said, that's very complete. The first thing is that at the beginning of this year, actually Azimut acquired the majority stake in Mama Crowd.
Okay.
So the entire crowdfunding platform is actually part of Azimut. So it makes even more obvious sense for Azimut to have a direct interest into investing in anything that passes through the platform, or at least having the right to do so, as Alicrowd has currently.
Mm-hmm.
And that was the second point we wanted to add. So it was the structural agreement for the Eltif to invest in Mama Crowd startups. So that's an interesting point. And from the example of Dove.it, we see that they can also follow on independently from being in an active campaign.
Awesome. Right, moving on. LIFTT, a big player that we've seen and we've appreciated across, I would say, the last year for sure. Again, strikes another investment of $500,000 to Aria Sensing. So LIFTT has been very active in the IoT space. This is another investment that kind of matches the style of portfolio, and I thought it was particularly interesting. So, Nick, what is your take on that?
Well, this is one of the verticals where I can't say I understand fully what they're doing, but Aria Sensing is a hardware startup. They came up with this radar on a small chip, 1 centimeter or so, to be used in monitoring and other type of environments. I don't know where the see-through was. That's interesting. So probably the frequency that the radar is using allows some magic tricks with respect to traditional competitors, and probably, as I see the picture of the car, there's a strong opportunity in the autonomous mobility, autonomous driving, or assisted driving sector, probably.
Totally.
But I'm just imagining from the website. I don't know. So, I know you've studied it more.
Not really, but I've seen similar deals actually. So people tracking has been blowing up, I would say, in the past 4 years maybe, from, of course, the advancement of the new technology in terms of radar and even imaging and imaging processing. And I've seen actually, but I don't know if these guys are doing something similar. I've seen this application commercially to actually track the flow of people in buildings, both in 2 ways mostly. One is a security-based sort of flavor, which is tracking the flow of big buildings will tell you something about the safety of the building. So it's a safety play. So you can say, in case of an emergency, you can see which are going to be the more congested area, and then you can take sort of a measure for that. And another application in terms of always people tracking is in retail stores, to actually track and monitor people coming in and out, and having a metric that tells you something meaningful about the business. I don't know. It's been interesting. It's been I thought it was an interesting play.
Okay.
Awesome.
Just about people sensing. Okay, very nice.
Moving on, I would jump to Cazoo announcing its abandonment of the EU business, following different actions taken from the acquisition of Brumbrum. So, what is your take on that, Nick?
Well, it's not an happy story, or it appears not to be one. They acquired Brumbrum not long ago, just a few months ago.
Yeah.
And it appears now Cazoo is leaving continental Europe, basically. So focusing on the UK operations, and it seems that they're making all the people in the European countries redundant. So that's a strong action.
Yeah.
So
huge cut. I mean, jobs cut is definitely every day. Every day you hear about the big tech kind of starting cutting, and it's massive cuts all the time. I mean, in the US is definitely a little bit bigger. Europe still has like huge number, and it's a saddening story for sure.
From the article, it appears that Cazoo in two different moments let go a total of 1,500 people, so 1,500 people. So they had a lot of personnel actually.
Yeah.
I find out right now. Cazoo is one of those examples of extremely quick blitz scaling strategy, and it appears when the market turns around, maybe it doesn't work in a great way.
Yeah, I mean, not the first case of a blitzscaling startup entering Italy and be like, nope, we don't like it here, let's move back. I mean, we've heard this in the past year with different situations. Are we seeing a pattern here? I mean, something is happening. Maybe on specific industries, it's particularly tough. It's tough to say, super tough to say.
It's difficult. It's probably has something to do with low marginality, high investment in acquiring customers, and need to go fast and burn a lot of money. And when money stops, you really have to take hard decisions quite quickly. So we've seen it, as you said, with e-commerce, we've seen it with Cazoo. There are some signs that also the buy now, pay later momentum is slowing down in a sense, with some news related to follow-on rounds at very much lower valuations than the latest round from the main players. So there are some markets where reality seems to be coming back and knocking at the door and say, hey, you know what? I see low or no margins. Probably you should think better.
Totally.
I'm joking, but still.
Exactly.
From the outside, that's the impression.
That's how it looks. Interesting. All right, let's end up maybe on a note. Again, PLG is another keyword that we've seen happening across. You already mentioned a few excellent articles, so I encourage the listener to go check out the past issues of Nick's newsletter to have a look at the different articles. Also this week, I thought it was great articles full of insights in terms of product-led growth startups, so PLG startups. Yeah, I mean, any particular insights that you wanna mention? I thought there was a few ones that were particular.
Well, the take-home points at the end of the article are more than interesting. I think you're noticing a pattern that I'm studying the PLG model.
Yes.
But there are some interesting articles here and there. I think this is not, from my position, my point of view, this is not particularly, mind blowing in a sense, because finding out the demand curve of your customer is nothing new. The problem is not that you need to know to find it out. The problem is finding it out and how to understand what's the demand curve for your customers. But I think the most interesting takeaway point is actually one of the most difficult and one of the most obvious, but less explored, is how do you increase by 20% your profitability overnight? You take a hard look at your pricing and you change it.
Awesome.
Yeah, that's, sometimes, in particular, if you have no experience as an entrepreneur, if you have no experience with international markets, you might think that, one price fits all. But from the articles, there are clear examples of how, the American market is higher income, is more professional, it is a deeper market. So it can command higher prices. Expectations are high, of course, so you can command higher prices. If you go to India, you can't go to India with the same pricing structure as the American market, because you will cut out a lot of your potential customer base. From our point of view, from Italy, probably we tend to underprice a bit. That's my experience with respect to international markets. So sometimes I've seen portfolio companies from our fund that start selling outside of Italy, in particular to the US. Like, in the US, they can't believe their eyes with the pricing. It's like too low. It happens. So I think it's the main takeaway point is that, don't treat all the markets as the same in terms of pricing, because there might be opportunities out there to heavily impact your contribution margin overnight. That's,
Interesting. I wonder if that would activate some of the old school problems where you have a pricing arbitrage across different nations and people sort of, if you want to be laser focused on changing prices on different markets, there might be different angles that can become difficult. But I agree with you when it comes to underpricing. It's sometimes it's easy to underprice and will actually assuming that it's going to work and fly better when actually it's actually the opposite. But
it might kill you.
Exactly. Those is one of those counterintuitive things, right? That you need to kind of digest slowly. Those are the
exactly.
Yeah, very cool.
You nailed it. That's exactly that.
All right, Nick. Thank you so much for joining, and I'll see you next week.
Ciao, Jack. Ciao, everybody. See you in a week.